Good morning, everybody. This is Yohay Elam of Forex Crunch and Market Movers podcast, doing the daily show for FX Street. I hope everybody had success in trading so far this week, which has been relatively calm, but I think we have big events ahead of us. So let's see what we have on the agenda today. Of course, as usual, we'll cover the recent developments, watch some charts and levels, talk about the next 24 hours, which should be quite busy, and of course answer your questions. So if you can't see the chat box, the address is here below, and let's start with what's going on. What we had so far yesterday in markets was mixed housing data. So we talked about this option yesterday, that one figure could go one way and the other way. So that's exactly what happened. We had building permits go down below expectations and housing starts go up. So it's quite confusing. All in all, housing figures are quite good in the United States, better than manufacturing, that's for sure. But these figures didn't supply more information because they went both ways, okay? In New Zealand, after 4 consecutive rises of milk prices of the global dairy trade, we had a fall, this time 3.1%. After 2 months, this is released every 2 weeks. So this weighed on the New Zealand dollar. And during the night, we had here Japan posting a trade deficit. Okay, it was a bit below expectations, but many analysts still think that the Bank of Japan will not make a big move on October 30th. We're 9 days away from that decision. Before that, we have, of course, other central banks. So let's see what's going on the charts. Good morning, everybody. Well, as always, good morning, veteran. Of course, as always, we welcome your questions. Okay, so let's look a bit at the charts. Euro dollar very much in range. So in the past hour or so, we're seeing it move a bit higher. 113.75. This used to be an important line not that long ago because it was support back in 2003. Yes, 12 years ago, and also resistance just a few months ago. But now it's a bit more. It has been shattered by the pair from all directions. I see 114 as resistance. The pair had some trouble climbing over that level last week. Well, temporary until it shot much higher. And then we have 114.60, which saw a false break, but it's still a line of resistance as far as I see it. 115 is above. On the downside, we have 113.40, which was, if you can see here, the shoulder line. Okay, we have here one shoulder, the big head, and then another shoulder, a break below this shoulder, and now trading a bit above. So it isn't as important as it was 2 days ago, this 113.40 line, but it's still worth watching. Okay, below that we have 112.90 and 112.15. All in all, very stable trading toward the ECB decision tomorrow. We have 24 hours and and less than 5 hours to go, under 30 hours, sorry. So I see the tension as rising. When pound dollar a bit off the highs, now at 154.40. It's in a clear range and a quite nice one between 154 and 155. 154 is support, 154.50 is sort of in the middle of the range, or 154.40 if you wish. Just a second. And 155 is resistance. 154 is becoming even stronger support. As you can see, it's a clear separator of ranges. Dollar yen. Okay, so we're seeing bigger deficit than expected in Japan. Let's first look at the numbers from Japan. Here, this is the FX Street calendar on Forex Crunch. We had a trade deficit of 114 billion yen, more than expected. Yeah, as you can see, the figures there are in red, and also a smaller than expected rise in exports year over year in September, and a bigger rise in imports. A smaller fall in imports than expected. All in all, negative figures for Japan. So many are expecting the Bank of Japan to ease. So that's one of the reasons behind the fall here of the yen, or the rise of dollar yen. As you can see here, it's getting ever closer to that all-important 120 line, which it loves so much. Okay, so the high so far, yeah, we've already surpassed 120 earlier. Remember, it's not a resistance line, it's a magnet. The pair likes to trade around this line. So currently 119.86. The session low for today 119.75 and the high 120.07. So I would define this as hugging 120. We've seen the pair fall last week all the way down to 118.10. So we did see it break out of range, but that didn't last too long. We saw it grinding its way back up, and it's waiting for the BOJ, and of course also hints from the Fed. And now it's a bit back to the. Let's see if screen share disappeared. Let me get that screen back up for you. Yeah, you should see it right now. Good morning, Rob. Good morning, Vedran. Looking forward to all your questions. Let's move on to the next chart, dollar CAD. Okay, here we have. This has been the Canadian dollar has been in focus in the past week. Two main reasons. First of all, the elections in Canada. So for those of you who aren't up to date, we'll have a new prime minister in Canada, and he's supposed to be sworn in on November 15th. That's Justin Trudeau from the Liberal Party. They won an outright absolute majority in the Canadian Parliament in Ottawa. He beat Stephen Harper after the latter spent over 10 years as Prime Minister of Canada. We've seen the Canadian dollar suffer a bit after the election results. Markets do prefer certainty, do prefer the devil they know. So we did see dollar CAD rise above 130. Since then, it did fall back down. So it's not a one-way street. And all in all, Canada is a stable democracy. The more important event for Canada today, it comes in today. That's the decision of the Bank of Canada. Stephen Pelosi and his team will make a decision. They're expected to leave the rates unchanged, of course, at 0.5%. Well, because central banks don't change rates too often. But it's important to remember that they did cut rates twice this year. First of all, in January, just one day before the ECB cut its rates, and began QE, announced QE, and then also in July. We were seeing the price of oil fall again. Yesterday we had the API release, which was quite poor, and then we also have today the regular crude oil inventories, and this is also supposed to pressure the Canadian dollar, because more inventory, more glut, lower prices of Canada's most important export. Okay, so we have from the United States, its inventories in the United States, but of course it has a huge impact on Canada. We're expecting, after a jump of 7.5 million barrels last week, we're expecting about half that level, just under 4 million. But anyway, the fact that inventories are rising is problematic for Canada. What will the Bank of Canada do? Will it respond to falling oil prices and hint about further action? If so, resistance line to watch is 130.70. That was the high that we've seen last week after the big fall. And let's zoom out a bit. So we have here 130.70 as resistance, then 131.20, and then 132. If they're optimistic about the Canadian economy, because unemployment rate is still relatively low and the economy is moving, then we might see it fall. The lines to watch on the downside are 129 and 128.25. Which direction will they pick? Most analysts talk about a more optimistic view. We've seen Pelosi and his team relatively optimistic in the past. All in all, the fall in the Canadian dollar has helped the Canadian economy quite a bit, and perhaps they don't want to shoot more tools. Remember, if they do some verbal intervention, they'll eventually have to act. Okay, so they can't sort of waste their words. I believe they'd rather be optimistic now, and when things really become bad, then they can use this verbal intervention, talk about more action, weaken the Canadian dollar, push inflation higher, push exports higher as well, and then of course they'll need to act. I believe they'll keep their powder dry, as they say, the tools in the shed, and they won't act. If they'll be very optimistic, of course, 129 is the first level to watch, then 128.25. If they'll be pessimistic, they did surprise with rate cuts earlier this year, then we could see further rise. Not that long ago, just in early October, or say late September, we did see dollar CAD rise all the way up to 134.60, which was the highest level in 11 years since 2004. Okay, so that's the main focus of the day is for me the rate decision in Canada. Good morning, everybody. Waiting for your questions. Let's see what else we have today. So during the show, we have from the UK public sector net borrowing. It's not usually a big market mover. Just important to mention that the UK government, the Conservative government, and also beforehand the coalition, they talked about lowering the deficit, and we don't really see it in the figures because public sector net borrowing was 11 billion. That means the government spent more than it took in. This time it's expected to squeeze to under 10 billion to 9.4. In general, lower deficit means a stronger currency. In practice, it's a second tier or third tier figure. And then 11 here, I see, sorry, at 9 GMT, we have current account deficit from Greece. This isn't an important figure, but I'll take the opportunity to say that the Greek crisis is still going on and it can explode next month, probably in November, as the Troika reviews the situation in Greece. But let's see the more important events of the day. So at 2 GMT, Bank of Canada decides. Again, most analysts are expecting a more optimistic view. That means we could see dollar CAD fall. Then very, very much related crude oil inventories half an hour later. And this time it's different with the Bank of Canada in the sense that they also have a press conference. Okay, so we have at 3:15 GMT, now we're in 15 minutes after the decision, we have Stephen Pelosi and his team in Ottawa facing the press. So maybe there we'll see more optimism. He likes to wave his hands quite a lot. Let's see if he also says something meaningful. Maybe he'll be asked about the election results, and I think he'll be smart enough to not answer any question regarding that. But I think I talked about this yesterday. So for those of you who weren't here, there are some people in the Liberal Party in Canada that talk about changing the mandate of the Bank of Canada, allowing it to allow more inflation, to raise the inflation target. So if this is changed, if the charter of the BOC is changed, that could be very, very meaningful. That would be a big step from the government that would move the Canadian dollar, because all in all, central banks have much more power than governments in moving markets. So I believe he'll be asked a question about that. I'm not sure he'll answer something that's currently quite hypothetical. Okay, at 5 GMT we have another Canadian, Mark Carney, but he's the head of the Bank of England talking. Let's see if he talks about raising rates early in the next year. He said that in the turn of the year it would be interesting to begin talking about raising the rates or something complicated of that sort. They have rejected talk that they're influenced by the Fed. I think they're very influenced by the Fed. And talking about the Fed, we have Jerome Powell at 5:30. GMT usually doesn't talk about monetary policy, so I'm not sure it'll be a big event. Yesterday, by the way, we had Janet Yellen talking, but it was nothing related to monetary policy. And then for those of you trading the Aussie, we'll reach the Aussie chart soon. We have an RBA member, Eddie, not sure I'm pronouncing his name correctly. He'll be speaking early in the Asian session at 10:45 GMT. These are the events for today, but also let's talk about the events during the night before our show tomorrow. So we have at 12:30 from Australia, 12 GMT, the NAB business confidence. Let's see what we're expecting there. This is a meaningful release, not as GDP, employment, or rate decision, but not something we should ignore if we're trading the Australian dollar. So it's a quarterly release. Last time we had a positive 4 points, which means optimism about the economy. This time maybe we'll see a negative number because of, China. Everybody blames China. So we're doing the same here. And the previous quarter, it stood on 0. Okay, and in 2010, it was negative last time. So we've seen a few years of optimism in this survey. All right. So let's see if we have any questions. Yeah, good morning, Jax. With all these talks, do you think the market will be just chaos? What are you referring to? The ECB or something else? So please clarify, and I'll be glad to answer the question. In general, I can say that when we have lots of market movement, when we have this kind of stability in markets, and when we have less action, when we have ranges, see the markets trading in range, then after a long period like this, we usually have markets explode. So I'm expecting some kind of explosion to occur. I think that in the case of the euro, it's just around the corner because markets are tense towards the ECB decision. So regarding the ECB, we'll talk, of course, much more in detail tomorrow. And the fixed rate also has live coverage, but talk again now, just a short preview. Everybody's expecting the ECB to be a bit dovish, to hint about action in December, to be ready to act. They don't like a strong euro. Inflation is still too low, core and regular inflation. But we do expect some kind of action already. We don't expect any kind of action already tomorrow, just a hint. And the bigger question is, let's put the euro chart on, is if we'll have what is priced in actually. So I believe that a hint of more action is already priced in. So if Draghi tries to do something dramatic and say that we are ready to act next month without any details, I don't think the euro will fall because this is already priced into the euro. Okay, if he does say that they're ready to print more money immediately, or open the door once again to setting lower and even lower negative deposit rate, that could be meaningful without acting. Okay, if he's of course optimistic, the euro will shoot higher. So the base case scenario is ready to act next month without details. So, and then if we have something different than that, we may have chaos. Even if we have this kind of sentiment from the ECB, and even if it's priced in, I think that tension is building up anyway, and we will see bigger movements than we've seen in recent days, which were quite shallow and narrow, I would say. So we've seen, well, let's look at today's range, 113.40 to 113.77. That's under 40 pips, that's nothing. Okay, we've seen much bigger moves beforehand. And if we even look at yesterday's range, if we include that as well, it's 113 to 180, 113.80. More or less, which is also quite poor for what we've seen beforehand. So I do think we could have, after these times of stability, we usually have some kind of chaos. Another follow-up question, all the banks have a talk today. What do you mean by that? Which banks have a talk? I mean, they're preparing for the ECB, they're preparing for the BOC, but I heard that Credit Suisse is doing some reorganization, but I'm not sure what you're referring to. Anyway, Vedran asks about pound yen. Sure. Let's jump to pound yen and then return to Aussie dollar and other currency pairs. We have it right here. Pound yen is on the move higher. It got quite close, but still no cigar to the 186 level that I'm watching quite closely. Okay, 186, as you can see here, in September, it was high support. The pair traded in high range between 186 and 188.10, and it was a support, and now it turns into resistance. We've seen so far the pair stabilize above on higher ground, but what level do we see here? So it's around 184.80 that we're seeing support for the pair in the current range, and yeah, 184.80. The high so far yesterday was 185.60, still shy of 186. These are the levels to watch. On the downside, we have 184.35 and 183.55. Okay, these are the levels I'm watching in pound yen. The pound yen offers lots of pips in comparison, for instance, in these days to euro dollar. The general trend is up because the Bank of England is expected to raise rates, while the Bank of Japan is expected to do more easing. But as always, it's not a one-way street. And we'll hear from the Bank of Japan on October 30th, and the Bank of England depends a lot on the Federal Reserve. So it's not a one-way street. Anyway, these are the big levels to watch: 186 and 188.10 on the upside, 184.80 as immediate support, and then 184.35 and 183.55, the levels that I see here. Regarding the yen, we do expect some kind of explosion in the yen on October 30th. The Fed decision on October 28th is not expected to move markets too much because nothing is expected there. Of course, markets will move, but not crazy. Okay. Let's see if we have more questions before we move to other currency pairs. No questions at this exact time. So let's talk about Aussie dollar. Okay. So in the past 2 hours or so, I think we're finally seeing a breakout of Aussie dollar down from the range. We're seeing it fall towards 72, the round number, which provides support. If you can see on the screen, we also have here a nice triangle, a wedge. So here we had narrowing ranges and finally a breakdown. Worries about China are the main driver. We had it sticking around the 72.80 level, which was the post-Fed high in September. The wider range is 72 to 74, currently still above 72. The low has been, let me just take a peek here. The low was just above the lows at 72.10. Let's see further levels below, but finally we're seeing some action. So here we had the case of consolidation for quite a few days, narrowing ranges, narrowing here in this pendant, triangle, wedge, whatever you want to call it, and now a clear breakdown to the downside towards 72. Still no break of this level. Let's see if we have a bounce from here. But anyway, we had a relatively, in comparison to previous days, we had a strong movement. You can see that this bar is, of course, much longer than the other candles that we've seen beforehand. Okay, further support, real support only 70.40 and 71, sorry, and 70.40. And then, of course, under 70, under the round number, we have the double bottom of 69.35. On the top side, we have now 72.80 becomes resistance again, even though it was the middle of the range, and then 74 and 75. So Aussie dollar was quite exciting in the past few hours, actually. And a similar phenomenon is seen with the Kiwi dollar. So as we said early in the show, in New Zealand, we had yesterday bad news. The price of milk is falling. That's really critical for exports in New Zealand. So we've seen the pair fall below the narrow range around, it was battling 68. And we saw it losing also the 67.40 level, which was resistance last week. Okay, so now we're seeing it dip its feet in the cold waters under 67. Still no break below this round number, which is not that important. 66 is the real, is much stronger support. Okay, it was the pair had to battle to climb above it, and then this served as a stepping stone to the upside. So we have the Kiwi and the Aussie falling in tandem at the moment. Okay. Vedran says, thanks. Looking forward to more questions about other currency pairs. In the meantime, let's talk about more currency pairs. If you have something more specific about charts, about fundamentals, shoot. Okay, so we talked about these ones. Dollar Swiss. Let's see if the chart loads. We have 95.35, a bit above the lows. Like, doesn't it load? Let me try to refresh the screen. The low last week was 94.80. Now we're seeing the pair, the dollar Swiss, rise above this level. Can you see the screen? Yeah, now I guess you can see it. So it's sort of in the middle of the range. The range is 95.87 on the upside, 94.75. So sort of a more or less 100 pip range. Now we're in the middle, above the middle, trading a bit higher, recovering from the lows. 95.25 is sort of the pivotal line in the middle of the range. It served as support last month. Okay, so dollar Swiss mostly influenced by the dollar. Euro Swiss influenced by the S&P among others, also recovering from the lows. 108.45 last week we've seen it fall to 107.80, and high resistance is 110. Beforehand it got stuck around 109.40. That was sort of the middle. That was the pivotal line that it traded around, influenced as aforementioned by the Swiss National Bank. Euro pound, more interesting than Euro Swiss, 73.62, rising on the rise of the euro and the fall of the pound, both against the dollar. So we're seeing this 1-2 punch that plays against euro pound, in favor of euro pound, against the pound, of course. So 74 is the level to watch on the upside, 75 above that, 73 on the downside. So we're looking here at more round levels. Let's move on to euro yen, the safe couple, if you wish, safe haven, even though the euro is behaving a bit less like a safe haven in the past few days. 136.30 is the level we're seeing now, higher in range. So 137 is resistance. 137. Let's add a small line here. That was the high seen last week. Horizontal line right here. 137.50 above that. 135.60 used to be resistance. Now it's a bit broken. 134.20 is weak support, and significant support is at 133.15. Pound yen we already talked about. Let's look back at euro dollar and examine that it's a bit stuck in range. This is the 4-hour chart. And let's see if you have questions. Yeah, MRC asks, commodities are gaining strength. Is it risk on? Well, we've seen a few good days for commodities last week. So we've seen the Aussie rise, the Kiwi rise, and also the Canadian dollar gain ground. But now we're seeing sort of a stabilization. Regarding milk prices, we're seeing it falling back down. This bi-weekly release went south this time after 4 rises. So commodities are a bit stuck. Regarding oil, oil prices are not terrible, but we've seen that inventories are rising. Okay, we've seen the API figure, and now we're going to see the crude oil, the regular EIA inventories. So it's not really going well for oil, and that's why we're also seeing the Canadian dollar moving a bit lower. That means dollar CAD is above the lows. That to answer your question, it's not risk on yet. If we hear more dovish messages from the Fed, if we hear more money printing from the ECB, then it's of course risk on, because we have more money printing. Currently, it's sort of mixed, I would say. Last week was much more risk on. Now we're seeing commodity currencies going down. Okay, that answers the question. Let's see if we have that figure from the UK. It's now at the bottom of the hour. Not yet. Okay, anyway, it's not a top tier figure. Let's look at the pound anyway. Let's see if it reacts. So pound dollar at 154.43. Let's put the 30-minute chart to see if we have some good reaction. No figure yet. Anyway, let's overview this week. So Monday we had Chinese GDP and industrial output. It was sort of Goldilocks numbers because GDP came out at 6.9, under the Chinese government's target of 7, just under, but above economists' expectations of 6.8. Lower industrial output, higher services, exactly what the Chinese government wants to see and wants to show us. Everybody takes these figures with a big chunk of salt, okay? But that was enough for the Aussie to stabilize on Monday. Since then, we're seeing it fall. Yesterday, we had housing data that was decidedly mixed, as they say. Fed speakers didn't rock the boat too much. Today, the Canadian rate decision, which is, of course, more important than the elections. And tomorrow, we have in the UK retail sales during the show. And this should be a market mover. And of course, the ECB rate decision, the big event of the week. On Friday, we also have Eurozone PMIs, which are forward-looking figures and the really fresh ones. They're flash PMIs for October. So this also should be a market mover for the euro, even though it's a bit overshadowed by the ECB on the previous day. All in all, we're seeing stable markets this week, more stable than I would have hoped for, but c'est la vie. Still no figure there from the UK. Let's try to refresh this. Anyway, as you can see, this public net borrowing from the government is not a big market mover. And let's see if we have here Australian dollar. Okay, found its low at 72.10, just above resistance, just after above support at 72. That's what's going on. But let's, while we wait more questions, and markets are not moving too much, let's talk about other things. Something interesting that I read today. Also in Australia, if we're talking about the Australian dollar, we had the regulatory body in Australia, the ASIC, the Australian Securities body, decided to change regulation for Forex brokers. So now if you want to open a brokerage in Australia and the land down under, you need to put not 200,000 Australian dollars like it used to be beforehand, but 1 million Australian dollars. So it's a five-fold increase in what's going on there, okay? So this is quite a big change, and we're expecting it to impact the industry, of course. I don't think that's related to what we're seeing now in Aussie dollar, but it's something interesting. One of the reasons is, of course, what the Swiss National Bank did back in January when it decided to remove the peg under Euro Swiss. So that, of course, hurt a lot of traders, hurt a lot of brokers, and triggered some action from regulatory bodies all over the world. Okay, so this is an interesting move. Some brokers had to shut down, like Alpari UK. Some brokers had suffered losses. Some brokers just made a lot of money from this S&B, so they're always winners and losers. Rob, thanks for keeping us up to date. So it's 8.6 billion in the UK, and Pan asks, "Is that good?" Let's look at the price. It's more or less within expectations. Let me put this chart back up for you. You can see that there is no big movement in pound dollar, 154.54. Yeah, a bit above, bit better than expected. We talked about 9.4, and it's 8.6. As I said, it's not a big market mover, so as you can see on pound dollar, it's not moving too much at all. Okay, we're seeing this low volatility environment in recent days, but it doesn't apply to everybody. At least here in Aussie dollar, we're seeing quite a nice move to the downside, now stabilizing, but all in all, we've seen it break down out of range. I think this is in line with the long-term direction of Aussie dollar. Okay, let's see if you have more questions. Get rid of the crooks. Yeah, there are too many bad guys in the Forex industry, especially, of course, brokers, unregulated brokers. And even if a broker is regulated, it doesn't mean it's safe and sound, as we know. So we need to be very cautious. I hope the regulatory authorities will use logic and make logical decisions about forex trading, defend the traders and not the brokers, and make things safe, not impossible, or not too wild. It's very hard finding the balance between protecting the consumers and not killing the whole industry. So it's hope they find, of course, the right path. 113.63 is euro dollar, very stable. When we had euro Swiss, that's stable, above 120 for a long time. Too many traders bet against the Swiss National Bank. They thought it would last forever until the music stopped, and they lost a lot of money, and those bad brokers went after negative balances. So I hope we won't have too much stability, and we'll have ongoing volatility onwards and upwards. Okay. More questions. Pan asks, hope so went went long on dollar yen earlier this morning. Missed the answer to veterans' questions regarding pound yen. Pound yen. Oh, okay. Pound yen. Well, let's put the chart of pound yen on the screen once again, and we'll talk about that briefly. We've seen pound yen rise to a high of 185, almost 60, still below the resistance line of 186. This is an important line because it was high support when the pair traded at higher ranges earlier, just a few weeks ago. And support is at 184.80. Further support 184.35 and 183.50. All in all, I see the long-term trend as higher in this currency pair, and let's see how things are going. We're seeing this uptrend higher. A lot depends on what the Bank of Japan does on October 30th, just 9 days to go. It depends less on the Bank of England at this moment. Of course, we have market moving events, but regarding the long term, the big event for pound yen on the horizon is the Bank of Japan's decision in 9 days' time. Okay, so that's the brief version of what I answered Vedran earlier. Any more questions from Pan, from Rob, from Jax? Let's take another look at. Yeah, we're seeing too many currency pairs hugging levels. Dollar yen at 120 and dollar CAD at 130. But at least regarding dollar CAD, you don't have to wait too much. Today we have double or triple feature, if you wish. We have the rate decision by the Bank of Canada with the accompanying statement. Then we have oil inventories, the weekly release. And then we have the press conference by the Bank of Canada's Governor Stephen Pelosi. Okay. Let's see if you have more questions, or we'll continue with the wrap up of the show. Let's take just another look at Aussie Dollar, the currency pair that did break lower, that is on the move, more or less reached support at 72. 72.10 was the lowest level. It's a clear breakout. It happens today. So that's an interesting pair to watch. Jake always asks, what is the best bet for today? What pair should we watch? So far it's been the Aussie, and later on it'll be the Canadian dollar. Okay. So it's time to wrap up. Let's begin from the beginning. So this is the wrap up for Wednesday, October 21st. We have a bit less volatility in markets recently, but things could certainly explode with two important things that are happening today and tomorrow from central banks. Looking to the past, we had mixed housing data in the United States that left us sort of looking for direction. But we did have moves in New Zealand. Milk prices fell 3.1%. That's the first fall after four consecutive rises, first fall in 2 months, and that hurt the New Zealand dollar. We're also seeing the Australian dollar on fresh worries about China falling as well. So these antipodian currencies are on the move, and the move is to the downside. Japan posted a trade deficit larger than expected, and this hurt the yen just a bit. So dollar yen is moving higher, but it's moving higher exactly to the level it loves most, 120. On our agenda today, we had public sector net borrowing from the UK. It came out a bit better than expected, had no impact. And today is Canada Day in terms of, not in terms of political terms, but in terms of markets. We have at 2 GMT, the decision of the Bank of Canada. Many analysts expect the Bank of Canada to be more optimistic, to keep its tools in the shed, even though Canada is officially in a recession, a shallow recession at the moment. At 2:30, we have GMT, we have crude oil inventories, and it's expected to rise a lot. It could be the Canadian dollar could fall on that. And then we have the press conference by the Bank of Canada's governor. He will be asked political questions and will probably ignore them. But let's see if he slips something interesting. At 5 GMT, we have another Canadian, Mark Carney of the Bank of Canada talking. And then 5:30, Jerome Powell of the FOMC and Ede of the RBA. So lots of talk from central banks and less indicators. But we do have indicators during the night before the show tomorrow. Australia's NAB business confidence and Spanish unemployment rate. Hopefully it'll continue falling. It's also important politically towards the elections on December 20th. Looking at currency charts, we see clear movements in Aussie dollar against the Australian dollar against the US dollar. We're seeing it fall out of range, out of the triangle, hitting support just above 72. 72.80 is resistance, followed by 74 on the downside. Below 72, we have 71 and 70.40. New Zealand dollar, also a currency on the move. It broke below support at 67.40. We can see a very clear break also here. Both currencies are relatively well behaved technically. So we've seen it dip under 67, still no break, further support at 66, resistance, high resistance at 69. Other currency pairs are a bit stuck. Euro dollar, waiting for the ECB tomorrow, the big event. Will Draghi hint about rate cut? About more QE? Yes or no? Is it priced in? Probably priced in. We'll talk about that in detail tomorrow. So come to the show tomorrow, of course. Pound dollar also stuck in range between 154 and 155, a bit lower now. And dollar yen loving its 120 level. Dollar CAD sticking also to 130 before the big events later today. So that's what's going on in markets. Lots of tension towards for the Canadian dollar. We're talking about today's BOC decision. And for the euro and the wider markets, of course, the ECB decision is the big event of the week. So this is the wrap up for today. And last question by MRC. Can we have an easy explanation about risk on, risk off? Well, in general, I'll answer that very shortly, that when there's a risk on mood, people are buying less Japanese yen and more risk currencies like the Australian dollar, New Zealand dollar. When we have risk off, it's the other way around. People are flying to safety, more yen, less riskier currencies. But please come tomorrow, ask the same question, and we'll have more time to speak about that in detail because we're running out of time. So this is the general mood. Risk on, buying stocks, buying risk. Risk off, selling stocks, buying Japanese yen in very short terms. So this has been the morning show for today. Thank you everybody for coming, and looking forward to tomorrow. We'll talk, of course, in detail about the ECB, and it should be quite interesting. So thank you very much, and safe trading and good luck. See you tomorrow.